All right, so we are going to be talking about swing projections, how we can know the high and low of the day, how we can know the high and low of a session, how we can know the high and low of a week, and how we can know the high and low of that particular month even. So this is going to be a very strong tool that you can use. Now, it is very important to understand that we first touched on the Judas swing and the power of three, the manipulation, accumulation, and distribution. Knowing that is very important because we know the Judas swing is that manipulation part of your power of three, right? So all these episodes are in harmony. When you have that Judas swing, that manipulation part is exactly the part where you want to potentially draw your swing projections from. So what do I actually mean by that? For a session, so where will a session likely reach, or what can we actually target? Well, right here we have a London session. The London session starts right there and it ends right there. In between that London session, what we touched on is you have a manipulation part, accumulation part, and you have a distribution part, right? From this part, all that is moving down right here, this swing. Why is that a swing? Well, we are moving from that swing high to that swing low. This is a swing. It is moving into a fair value gap right there. Again, using the float and the lot. First line of defense right there. Last line of defense right there. A very logical move right there, right? So this Judas swing, this manipulation part, you would take your Fibonacci right there. You draw it from that swing low right there to that swing high. I'm sorry to interrupt. The 0.62 you are seeing, so the minus 0.62, that one is supposed to be 0.68. I messed it up with my Fibonacci settings and I noticed it in the edit. So sorry about that. It is supposed to be 0.68. All right, let's continue. Then the Fibonacci settings are 1 to 0. In between that, you have nothing. But on the minus side, you have minus 0.27, minus 0.62, minus 1, a symmetrical swing point right there, minus 1.62, and minus 2, a double symmetrical swing point. These levels is what price can reach for, especially in this particular session right there. What we would do here is you would want to make sure that you zoom out again, you zoom out a little, and right here you see, all right, we have a nice order block right there with fair value gap, even potentially that high, lining up with swing projections. So when premium arrays as target right there are lining up with swing projections, those are exactly what you want to target. So this is giving you a perfect indication of which premium arrays you want to target. So in this case, we can use the order block right there, the minus 1 level, the symmetrical swing level. That could be a great first take profit. And afterwards, if it does move aggressively through this, we can now look to potentially aim for this level and that level. And right here, it reached even higher on this particular day. Now, how can we know it reaches even higher right there? We had this London session right here, right? Now, notice I am now drawing it from the bodies to the bodies, not using the wicks here. And the reason for that is very much based off of volatility. So how much do you expect the market to move? And as well, play around with it. When you play around with this and you first go over the bodies, then you go over using the wicks and you see which one of them is more aligning with premium or discount arrays. So here I'm using the bodies right there from the London low to the London high. And now I want to zoom out again and see which levels are overlapping with premium arrays. All right, I zoomed out on a 4 hour. Can we see something? Yes, right here. What do we see? We have a fair value gap right there. When you see this, when you see these levels right there, and you see that fair value gap on the 4 hour, and overall, of course, the bias was still bearish. Can we now logically expect for it to reach into that -2 and then drop off? It might happen, but is it very logical? Of course not, because we have a fair value gap sitting right there. And why do we use that fair value gap? Again, first line of defense. So right there, all right, we have an indication it can reach into that 4-hour fair value gap. So now we have somewhat of an indication what the sessions can reach for. But what can the day actually reach for? Well, if we go over the steps again, so how can we know where to draw our measured swing projections? We need to have first a Judas swing or a manipulation part of that power of 3. So right here, the day opened right here, midnight open. That is your reference point. Everything above that, that is your manipulation. That is your Judas swing. You draw it from this high to that low right there. Does this line up with a nice target? Well, first we have a few fair value gaps to target. Below that low, of course, there's a few fair value gaps to target here. This one and this one. And then right here, in between those two fair value gaps, we have the 0.27 level. So is there a chance that we will sting into that lower fair value gap? Yes, there is. There's a logical chance that that will happen. And then at the right time of day, because right here, what happens? London close starts. If London close starts right there and we already reached into that and we haven't displaced any lower and we already moved a lot of pips. So we already moved a lot of pips up, a lot of pips down. Now we are arriving at London close right there, which we know will likely cap the day based off of the daily profiles we talked about. Is it now logical to say we will continue lower until 0.62? Not really. Yes, it can happen. But what you'll see is if we leave this one right there, if we leave it on, what happens? 0.62 is perfectly overlapping with what? This low right there, which is also what? A previous week low and a weekly fair value gap. All right, that is a very logical target for us. So I think we might want to target that. But now we are getting closer to what? We are getting closer to targeting something on a weekly. So if we want to know what will we likely reach for on a weekly basis, what do we use? We just use daily profiles and daily power 3. Now we want to use weekly power 3 and the weekly profiles. So what is a weekly profile again? Remember, Monday, Tuesday likely high of the week, or Wednesday high of the week. And then you have the opposing move. That is exactly what we want to see. So from Monday, where does Monday start? AKA where does the week start? Right there the week starts. Monday midnight open is what I use right there. So everything above this level right there. What is that? That is your manipulation. That is your power of 3. So this, again, you want to grab that Fibonacci tool, draw it from that high to that low. Again, you can use the wicks here. See which one lines up nicely with a discount rate. The bodies here, you can see it already lines up. It is not hindsight thing. It just lines up better because there is a weekly fair value gap sitting right there. So these right here is what you can use as targets. The 0.27 first, and then afterwards, the 0.62. And if there's a weekly fair value gap sitting right there, previous week low as well, is it now logical that we will reach for that symmetrical swing point right there? Well, in my opinion, it's not. If we reach for that, I believe we might even continue lower. Why is that? Well, based on the weekly fair value gaps and based on the float and the lot, where will we likely continue higher off of? Off of that weekly fair value gap. So we will likely see a rejection there. Once we reach into that, right there, we reach into that weekly fair value gap, into that level on this Friday, we have a thank God it's Friday setup. What is the Judas swing on this Friday? Midnight open is right there. Low, high, symmetrical swing point right there. Overlapping with what? A beautiful 1 hour order block right there. Fair value gap. What more do you want? So for a thank God it's Friday setup that you potentially took right there, what can the day, what can Friday reach for? Also using this concept. So now what is the next step? Or in your routine, in your analysis, your actual first step, a monthly analysis. So where does the month start here? Here we have Monday of May. Then we have this move up and we continue lower right there. Your Judas swing. Where is it? Your Judas swing, in other words, is your manipulation part of the power of 3. Where's your manipulation part of the power of 3 on that monthly candle right there? If we zoom out, of course, it is that part, that wick, right? So on the daily, it is everything that is above that Monday right there on the 1st of May. So that right there is your Judas swing. Where's your actual swing? Right there. Now, for this month, what does it line up with? Well, first we line up with a few lows right there. But what I always like is I like to aim for fair value gaps, because you need to remember, price is either taking liquidity or it is rebalancing something. Right here, there's nothing to rebalance anymore because everything has already been rebalanced. So if there's nothing to rebalance, what will it do? It will take liquidity. But when it takes liquidity, what will it likely do? It will reach into something to rebalance after taking that liquidity. So you could make the argument price is always rebalancing, because after taking this liquidity, what does it reach into? That fair value gap. And that is exactly what we had outlined in the weekly forecast leading up to this price action. If you don't believe me, watch the previous weekly forecast and you will exactly see what we were talking about during that month of May. We exactly had this as our target. So for this May month, we now have this level overlapping with a beautiful fair value gap right there. And that's exactly what I would want to see, a fair value gap. I personally always love to target fair value gaps. So once I see this overlapping with a fair value gap, perfect. That's it. Then what do we see after the next month? Where does it start? May ends here. All right, June starts right there. Then we have this little down movement. And then we continue higher right there. So this is our manipulation part, right? This is our Judas swing. Then right there, what do we see? Well, first off, we reach for that -2 level, that double symmetrical swing right there. But what do we reach for again? A beautiful fair value gap sitting right there on the daily, which is also a fair value gap right there on the weekly. And even more refined, there's an order block sitting right there. That is exactly your monthly target. If you already have that monthly target, see how many days you are able to capitalize on it. That is absolutely beautiful. So for your swing projection, you want to make sure that your swing projections are an indication of where price might reach for, but the PD arrays will tell you exactly in combination with those swing projections what it will likely reach for. Because for example, we also had this fair value gap, right? We also had that tiny fair value gap right there. And we did reach for it. Perfect. But it is the 14th of June. Based on the power of 3, do you think the monthly candle will stop right there and then just consolidate? It doesn't make sense, right? It's only the 14th of June. We're halfway through that month. The meat is in the middle. The same for a weekly candle, right? You wouldn't expect Wednesday to already make the opposing end of the week. No, the meat is in the middle. That's where the trend is. That is where we want to continue. So that is very important to understand. All right, here we are on ES. And I just wanted to go over the indices as well, the futures, because it's a little bit different. You don't use the same swing projections. You use standard deviations. What are standard deviations? So if we again draw the Fibonacci and we draw it on this leg, for example, right there, you would now have symmetrical swing points and half of that. So it's constantly 0.5, 0.5 added onto that, -1, 0.5 added onto that, -1.5, and it stops at -3. This is your standard deviations. Why is this? Well, that is because ES, futures in general, indices are way more volatile. So that is where you would use these standard deviations instead of the measured swing projections. So for example, why did I draw it on this leg down? Well, it's an obvious leg down, of course, but there's a reason behind it. Right here, what do we see? This is Monday. Monday starts right there. Everything below that right there is your Judas swing for what? For that weekly profile. So first off, we have this leg down, aka our Judas swing on a weekly profile basis. Then right there, we have a 0.5 level, which already overlaps with fair value gaps right there. That's what I love. So this Tuesday reaches into that first, then as a retracement. But for the weekly profile, it is only a Tuesday. We are not done yet. And after that, we have Wednesday, we have Thursday, and Friday, huge expansion higher, reaching for 2.5 with, of course, an overlapping, opposing premium array right there. That is exactly what we would want to see. And yes, of course, we could first have this target in mind, that fair value gap right there, with the symmetrical swing point right there. But if we don't respect this, if we don't show signs of respect, aka the rejecting video that we touched on, then what is the next thing that we can reach for? that high. Now, if we dive a little bit deeper into this, we have this high, this breaker block right there with an overlapping fair value gap right there. And now dropping down into the 15-minute, what do we see? We first off have this Judas swing, this fake move before you reach into that. So this fake move is already where you can draw your Fibonacci on right there. Almost symmetrical swing point, but the main premise behind it again, this is overlapping with what? It's overlapping with that high right there, that breaker block. Once we reach that, what was the Judas swing leading into that move? This right there. What is this overlapping with? That high right there. So what is a logical target? That high. Once you get in here, for example, just keep in mind that we have that high. Of course, on the higher time frame, we still have way more to aim for. But if you're scalping on a 1 minute time frame, is it logical to have a daily target? Not really. So if you scalp this on the 1 minute time frame, you might want to consider taking profits right there and getting break even. Now listen up, you made it to the end, so I'm here to reward you. Don't worry, I'm looking out for you. If you made it to the end, I'm here to reward you. So I want you to go to the link in the description, the ario.io, to my website. Once you are on my website, if you scroll down a little bit below the My Mentorship, there is an email which you can fill in. There's an email list that you can join. That email list is where I will be sending more studies, more breakdowns, trades that I took during a week, and very important updates. So if you made it to the end of this video, you are now being rewarded. So great job of making it to the end. You should thank yourself. Go there, fill your name, fill your email address, and then you will be receiving soon very important updates, very interesting topics that we can study, and even more educational content. Keep an eye out for that. And I will, of course, see you at 8:30 on Sunday with our weekly forecast and our Q&A. Perfect. Thank you.